Hi, I hope you're fine. I wanted to do a review about what we're going to see today. Pre-news, we're going to have analysis on Nasdaq, pre-upcoming FOMC meeting. We'll see some analysis of the monthly, weekly, daily. We'll also use some sort of tip or some sort of key to try and understand what we are aiming for, what is our preferred bias. And also, in continuation to our previous pre-news analysis, this will also have another overview about the difference between two different brokers. So let's dive in. So as you can see, we have in front of us the Nasdaq NQ chart, and something I wanted to say is that don't over panic. If you are going with long positions, if you are going if you are trading for weeks or days, don't be so afraid of this day. And this is because when I'm looking at the history of FOMC, I'm not going to do that now, but I have checked previous dates of releases, all of those days, and I've watched the size of the daily candle. How many ticks, how many pips did the market move on the specific day? And surprisingly, it wasn't that bad. It was actually quite average. But the problem is that when we look at news days, especially things like FOMC, we usually tend to see a very big candles, very long, very long or very big movements, and because of that, when I'll explain the hint and how I look at what's my gamble about what's going to happen, we'll understand better. So I looked at those days, it wasn't so bad. With gold, it's absolutely ridiculous, but with NQ, it's not that bad, not bad at all. So let's go back to the chart. Maybe before that, we'll watch that actually with the FOMC, there are also more news today. So maybe at the other days, it was just FOMC alone, but today we can see there are several big news, PMI, ADP, and of course, FOMC. A few things. First of all, remember, if you are trying to trade this, please don't, and I'll explain this later, but if you're trying to trade this, remember that the biggest move doesn't happen on the release, and that's one of the tricks. The biggest moves don't happen on the release, on the forecast and the actual information. It actually happens on the conference. So I remember one time I was trading gold, maybe 2 years ago, something like that, and there was a nice move on the rate decision, but afterwards, maybe an hour afterwards, price started to go crazy, absolutely crazy. And this is because the real movement happens here. So remember, you shouldn't trade on those hours. And this is my declaration to you. Have a good habit and don't trade on days like this, or if you are going to trade, don't do that in the New York session or an hour before the big news release, because it will impact the market and it would change the whole bias and things will start to look different. And if you're not trained enough to understand what's going on, you will be blown out. All right, let's go on. So let's go to the monthly chart, and I want us to see a few things. First of all, it looks like the monthly, unless something unpredictable happens, is going to close above these bodies. Unless, again, the rates will be higher and the market will start to go down hardly. If they will increase the rate, something that not likely to happen, I don't see it happening, but if it happens, we will see a close below, and then we will start a big fall down. This is one possible move. So this is the monthly overview here. Let's look also at the other broker, at Capital.com. And with Capital.com, we already had a close above the bodies, which of course meant we are bullish. And again, the candle, the current month candle is going most probably, we have only 1 day, so I don't see anything else happening, closing above the last month body. What does it mean to us? It means to us we are bullish. We are hardly bullish, we're extremely bullish. We have a very bullish movement. Does that mean we're not going to change direction, or does that mean that the next month we won't see a downtrend? Of course we will. We will see a downtrend, and I will speak about it in the last part of this conversation. You should always remember that in such situations, things like that, with candles like that, what it means is that presumably, most likely, and we are all talking about odds, most likely the next monthly candle is going to continue up. That's what it means. Does it mean it's going to happen on the first day? No. Does it mean it's going to happen on the second day? No, and so on. It means that in the long run, that in a period of a month, we are looking very, very bullish. There might be a decline? Yes. A decline is very possible. There will be a decline for several days. It's very, very likely. If you are enough time in the market, you'll notice that every bullish candle usually starts with a bearish movement. And only at the end or at the halftime of it, it would go up, and I will talk about it later. All right, so let's go on. I want you to see something very, very important. When we're still talking about the monthly, look at the US 100, the Capital.com chart, and let's look at NQ, and they are very different. As you can see, the US 100 way above the previous high, all-time high. We're in a new territory. But with Nasdaq, we are just getting above. These differences are very, 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 very important, because they are telling us how much we are above. For example, if we are way above here, but we're only slightly above here, it means to us that we are probably more bullish. That's what it means to me. Anyway, we still have to take into consideration, especially someone who trades long run, the differences between them. All right, let's move to the weekly chart. So in the weekly chart, we have some sort of bearish reaction. We took the all-time high. I'm talking about the Nasdaq NQ. We took the highest high. And remember what I said before. The weekly candle closed below. It also closed below the bodies, right? Let's see if it was exactly or slightly above. Let's see. It looks like it closed below. It closed below, which gave us, as I said, a bearish week, right? We're looking at the bearish week after previous week failed to close above those bodies, right? That's very logic. But does it mean that then that this week has to end bearish? It has to end bearish. Yes, it will end bearish. We are the move is bearish, but this might be looked as touching a fair value gap and going higher, right? Because this candle is touching a fair value gap here. Touching a fair value gap, right? The touch of the fair value gap, especially if this week closes above the fair value gap, right? Or inside the fair value gap. If it closes around here, to me, we are next week bullish. We will look at a bullish week. All right, so we still have a lot of room for correction, because if you can see, there's a breaker here, and the real move of the market, the way the market moves, is from breaker to breaker, in my point of view, as I already mentioned, and it should probably go down here to the breaker and then go up again, if we are looking at this fair value gap as a touch and up, right? And what about here? Exactly the same. Capital has the same input, same breaker, same fair value gap. So actually with Capital Com, this looks a little bit more bullish, right? Because the option to close above this low as a low that's being taken and going high is more probable. So this week was a bearish week, no doubt about it, but it could end up with tomorrow's help and Friday's help as a bullish move or some sort of a more higher move candle. Let's see the daily as the last overview. So yeah, in the daily, we actually almost reached the halfway weekly of the candle, which means that we can still go down, of course. But if this candle, which is currently very small, today would stretch higher, I am absolutely bullish. If this candle closes above here, if it closes today above here, tomorrow should be bullish, right? That's my overview. Should be bullish. That's Capital Com. I'm going to do the other comparison. Here you can see we had a more bearish movement, much more bearish movement, and the movement should end up above here. A close above here today would give us a bullish day tomorrow, which might lead to a close of the week where we wanted it to close, higher. But you can see there is some sort of consolidation on the daily movement. And this could all be some sort of turtle soup, right? This could be a consolidation. And with the turtle soup, we will have this kind of move. Consolidation. And then going down, hitting a breaker or a fair value gap just to go up in order to take all the stop losses of the buyers, because market usually before it goes to a real move, it would usually take the opposite direction stop losses. Sorry, not opposite, the real direction stop losses before it makes its move. And this is why whenever you're trying to trade, and I'm telling you wait, it's because you have to wait for this stop hunt to happen. And this is a turtle soup that also sits on the stop hunt method. Right. So what's my overview? What do I think is going to happen? Look, it's very likely to go up in my eyes, and I'll explain to you why. First of all, there is room to go down, so going down and going up again is very logical. It's not a bad thing if we close below. We just have more bearish movement, but presumably till the breaker and then go up again. This is the current move of the market, especially if in the long run the rates will be decreased, the interest rates would be decreased. But why do I think that why do I think that we are going to end this day bullish? All right, so first of all, even though we are in a FOMC day and interest rates day news release, I'm not taking this too much into considerations, because if you remember what I've said before, I've said that by history, and I've checked, I did my research, the research on myself. I've searched and I've seen that the overall move of the day is not that crazy. It's quite average. It's like every other day. And the reason, and I said that I'll explain, so how come it's possible that if we are looking at the news, we'll see big moves, but on the other hand, if we look at the daily, it doesn't seem that big. And this is because first of all, when the market is preparing for news, for interest rates, for manual intervention in the market, so it means that it could go either way, and the candle will probably, before the news, end up something like that. Can you see that candle? That candle is quite in the middle, and it's probably going to consolidate. There are 9 hours to the end of the session, and probably he will go up, he will go down, things like that. But eventually, before the news, I guess it would come to the middle, and this is why. So it would go either way, very bullish or very bearish, in order to end the day as a usual day in the calculation. You will see big moves, but at the end of the day calculation, it's not that crazy. But why do I think it's bullish? It's because of a concept that ICT introduced. It's not his concept. It's a concept that everyone that trades enough time knows it. And the concept calls power of 3. And what does it mean? It means that if we are looking at a bullish day, we will see something like that. The candle opens, right? The candle opens. And if we are bullish, it will have some sort of small rise. Sometimes it's unseen at all. Small rise, and then some sort of consolidation. And then a big move to the opposite side of its real move. Right? Going here, doing some manipulation, a stop hunt before it goes way up, and then doing the real move, the real stretch, the real expansion of the candle. Going to do another stop hunt before it goes to the close, and then closes here. So this, at the end, it would look like a candle like this. This candle, if you will look at it, this candle opened here, right? It made some sort of consolidation, probably went down like this. It's the false move, went down, gave the real big expansion, did its thing like stop loss or something like that, stop hunt or something like that, and then closes slightly before it. That's a typical bearish candle. And again, the quite same thing on the bearish candle, right? Opens here, doing a false move up, then giving a big move to its real move, doing some sort of stop hunt, and closes yet still bearish. Same here. Opens here, goes down, false move, goes way up, stop hunt, and closes a bit lower. And most candles have those moves. You will see that most candles have those moves, especially if it's a typical bearish or bullish candles. Candles like that or like that are candles that show some sort of consolidation. You see the candle size are smaller. They are not stretching. It means they reached some sort of resistance, some sort of a point, a sensitive point. And and we had a real big stretch here, but again, another correction. All right, so because of that, when we are looking at today's candle, look at it. How did it start? Did it start bullish or bearish? In the concept of the power of 3, right? In that concept, if we start at a bearish move, by the way, we started exactly like that. If you will look at the hourly chart, you can see that this is today's candle, right? It starts exactly like that. Look at it. It started here, started with some sort of up move, consolidation, big swing down with a stop hunt here, exactly as I showed it to you. And now it starts the real move. Where does it aim? Above this. Above this if it's a bullish candle. Let's look again. Look at the candle. It's already became greener, right? It's already becoming green because the real expansion, this one, it's currently playing out. And this is why I think we are going to have a bullish day. That's my thought. That's what I'm thinking. I'm thinking that we're going to have a big expansion to close where? Above these bodies. That's what I want to see. We were here already today. We were above those bodies today. We touched the fair value gap and we're probably going to end above here, which will mean that this week is going to go higher and we will probably end the week and the month in a very good day. I mean, if the weekly candle closes here, which it's going to close higher probably, right? We are aiming at a bullish reaction. Let's look at the monthly again. Remember what we just said. The monthly candle, the monthly candle is also bullish. We are at the end of the candle. What does it mean? It means that it won't be bearish. It's going to be bullish because we had, if you remember the power of 3, the candle starts here, doing the false move and now expands higher, right? But still, even though we still have to close above this, and this means that our next month will also be bullish. As a confluence to the power of 3, I wanted you to see this trade I took and to show you that I had a live stream and we were in this move. I was buying here and then stopped out here. And when I calculated the power of 3 move, it's quite obvious, became quite obvious that the power of 3 move had played out absolutely wonderful. Waited for the stop loss, wasn't sure when it's going to end. When it closed above, waited for here you can see the breaker as an entry, and then going up. So you might ask why I don't take my stop loss here. The reason is because we are already in a breaker area and it might reverse here. And for safety, I close at most likely place. I don't get greedy and then try to trade higher, even though it looks very, very probable to go much higher, right? So everyone have their thing, how to get confluence if the trend is continuing or not. This looks very, very likely to go on. Yet I'm still going to let it close right here because it's better to be safe and get the money in the pocket instead of just losing it because of simple move or greed. As I've said in the video of the gambler versus pro, if you have seen that video, you know that I talked about the goal of the trader. A trader must have a goal, certain amount of money, amount of ticks, amount of pips that he wants to earn, and that is what he's going to wait for it, and he doesn't play with it more, because all these might have unprobable movement. So you see there is some sort of a fair value gap here, and this is also something that nice to know, and it looks like a great place to close the trade. Why don't I do that? Why aren't I being safe and close here? First of all, it is possibility, but remember something very interesting, that when you see a point of interest, let's say that's your point of interest, right? Always look for another one, because price knows your ideas. He knows that you want to close here. So would he let you just take the trade and run? No, it ain't. He's going to aim higher, and there's another point of interest above, which would be the real point of interest, right? Which is here. So I'm keeping safe. That's it. Got my take profit, and after price hit the real target with a stop hunt like this, there is a possible decline to this breaker and a move up, and so on and so on. If we are bearish to this day, we just started the real move, the New York, and how surprisingly it just took the take profit of this move with a stop hunt, which means to me it's going to go down. So that's it. Remember, have a good habit. Don't trade on those hours, because your account won't suffer it. It won't hold it. It won't do it. It's the correct move that you want, the profitable move. The intervention during those days are manual, which means that someone sits behind the computer, takes the, let's say, joystick of the market, expands it low, down, takes everyone's accounts out, and only then continues the real movement. So that's my ideas. Keep safe. Don't forget to do always an analysis before you trade, to know where you are aiming for. Bye for now.